Hello, a very warm welcome. This is Spectrum on Radio 1. I'm your host, Edmond. Kizito, good evening. On Spectrum tonight, trade unionists question the pension sector liberalization plan. What is the response of government considering the concerns being fronted? Government, through the Ministry of Finance, has kick-started the process of liberalizing the pension sector, but the process is being challenged by some key stakeholders who say they sense danger. Liberalization means that other players will be allowed onto the market to provide other options to Ugandans to save for the future, as opposed to only having the NSSF or the National Social Security Fund. A task force was recently set up to handle the liberalization process, and one of its key assignments is to consult widely to ensure harmony by proposing policy measures. Yesterday, Spectrum hosted trade unionists who previously championed demands for liberalization, but are now insisting that workers are better off with NSSF, preferring minimal reforms instead of total liberalization. They claim that government has attempted to sideline them in this process, saying that a committee set up to handle the matter is influenced by the World Bank, whose interest is to ensure that Uganda remains dependent on them by eliminating major financial entities like the NSSF. The committee leadership was also accused of being arrogant and insensitive. Now, the trade unionists also indicated that there are no local Ugandan insurance companies in pole position to manage pensions after liberalization, warning that profits will be repatriated and that some companies are insecure, citing the NIC, or National Insurance Corporation, and Makerere University Sega. Uganda is running a liberalized economy, and the private sector is expected to lead in major aspects to provide better services, and it is this policy that augments the resolve of government to liberalize the pension sector. But now, the unionists insist government must protect its citizens. So tonight, we host members of the Retirement Benefit Sector Liberalization Task Force to try and understand their point of disagreement with the unionists, and also help them respond to several fears or concerns expressed on the show last night. Our guests tonight, Mr. Moses Bekabye, Chairman of the Retirement Benefits Sector Liberalization Working Task Force. You're most welcome, Mr. Bekabye.
Thank you, and good evening, listeners.
We're also joined by Mrs. Miriam Musali, a member of the task force also working with the Capital Markets Authority. You're most welcome, Madam Musali.
Thank you.
Mr. Bekabye, what are the arguments for the liberalization of the pension sector?
Yeah, thank you, Mr. Moderator. Let me start by giving a little background to the pension reforms in Uganda. The pension reforms in Uganda started in 2002. It's about 10 years down the line. And started with the Stakeholders Transition Group, which produced a report called the STG report, which report recommended having an effective regulatory framework for the pension sector, but also introducing competition in the sector in order to improve governance. So the government and the stakeholders agreed that they should put in place an effective regulatory framework and also liberalization. In 2008 and 9, government went ahead and approved a two-step process. One, to provide a regulatory framework for the entire public pension sector, including the private sector entities and also the entities in the public sector. The other step was to move forward and liberalize the sector. What we are trying to do now is implement these policy decisions of government. So what are the benefits? What are the objectives of liberalization? First of all, I want to make a distinction between, so that listeners can make a distinction between regulation and liberalization. These are two separate functions. The board that the Minister of Finance, Planning and Economic Development appointed recently was appointed to chair the board of the authority that is going to put in place a regulatory framework, or is going to implement the law that puts in place the regulatory framework that is going to oversee, regulate and oversee the entire pension sector. So,
yes.
Yeah. So there is, as I said, the process is two-step. One is regulation, and that process is half completed. We have the board in place. The other one is the one that talks about liberalization.
Yes.
The liberalization is mainly aimed at introducing competitive pressure in order to improve governance. Right now, as you may agree, both the Public Service Pension Scheme, the NSSF, and many other schemes in place. They are having problems of governance. The savers make their savings, but most of them, some of them don't get their pensions.
Oh, really?
In the public sector pension scheme, for instance, many pensioners die before getting their pension. Some of them get with a lot of difficulty. But also, that scheme is not financially or fiscally sustainable over the longer term. That's why it's always in arrears, and therefore that's why we need to introduce some reforms in order to improve the working environment and also to improve governance of all these schemes. Also the NSSF, you know all the scandals that have been happening, okay? So, and also the voluntary schemes, because we are not focusing on only the NSSF, we are also looking at the entire sector, including the voluntary schemes. Some of these schemes, maybe the contributors may be making savings, but some of them have problems, not all of them, but some of them have problems accessing their savings. So the purpose of liberalization is to improve governance in order through competitive pressure, also to increase coverage, because we are talking of now extending coverage to all those people in formal employment. Formal employment, what does it mean? When you look at the NSSF right now, the law talks of 5 and above. There's a threshold, okay? It doesn't talk about those people who are below that threshold.
In small companies.
Yes, please. And also those who are self-employed. So these reforms are aimed at broadening coverage so that everyone in formal employment is actually covered. But also those people who are self-employed and also in the informal sector to contribute towards their retirement voluntarily, not mandatorily. I have to make that distinction. By voluntary means, not by force of law.
Why not create a separate scheme for this? Because, I mean, you say NSF is not doing well. The only problems they seem to have had in the past was when government stretched its shadow into NSSF. That's the last 2 years has not been a problem, apparently.
There are quite a number of objectives for liberalizing the sector, as I mentioned. And liberalization, as you know, brings about innovation in terms of methods, in terms of methods of collection, in terms of products, and in terms of efficiency. Okay, so the reason why we are talking of liberalizing the sector is to provide a level playing field, for everyone. When you have a policy, the policy should be applied uniformly and not preferentially applied. And that's where the reform can be effective.
Madam Kirapa, can you give us some arguments against liberalization? I know you're not best placed, but some of the arguments you've had, whisper them to us.
I think I'll begin with the sentiments that you expressed at the beginning of this talk show regarding the issue of fund managers. There's anxiety in the public about who else can manage our money besides NSSF. We've been putting our money in NSSF for all this time. Who are we going to be giving our money to? And I'd like to say that the Capital Markets Authority has been regulating fund managers already since it was established. And so Capital Markets Authority has been licensing people to do fund management, and when you look at the portfolios, some of the schemes they've been managing are actually pension schemes. So fund managers is not a new phenomenon that is coming with liberalization. It has been here for the last 12 years. Fund managers are people that are licensed. Fund managers are people that the regulator goes to on a regular basis to see where they're investing their money. So I think the sentiment that this money is going to be taken offshore, that's some of the information that's out there.
Capital flight.
Exactly. Capital flight. It's not going to happen because every scheme must have an investment policy that complies with the regulator, what the regulator has set in place. And so when this new authority that Moses was talking about is established, they have regulations. Where can you invest? Can you put 100% of your money away? In fact, if you look at the new law, the Retirement Benefits Authority Act, it already deals with some of those issues. It says that the money in the pension scheme should not be invested outside East Africa. So So there's already a law that answers that issue. So I think that that issue legally really doesn't even stand, because right now you can't put your money outside East Africa until that law changes. So already you can see that government has been listening to some of these sentiments. It has already even put in place, because a regulator is established, certain safeguards.
You're a persuasive woman, obviously, but let's talk about the profits. Banks repatriate their profits, and there have been complaints, together with other big foreign-owned companies, and there have been complaints that this is a form of mild capital flight. Why do you want to suck money out of NSSF and, channel it into places where it can be taken away offshore?
I think that it's not sucking money out of NSSF. I think competition is good for NSSF. I think that, in fact, NSSF should be supporting liberalization, because, when you have a competitor, you have to be smart. It means that even the investment decisions of NSSF should not be the decisions they made years ago. They have to have more strategies. They must position themselves for liberalization. And basically, liberalization is saying, look here, instead of you being the only person that gets 15% from all the formal workers that are out there, we want to know what rate of return will you give. And so they're opening it up. So I think there's even an improvement in NSSF. And I think strategically, NSSF is thinking of liberalization, is positioning itself, and that means that NSSF can actually build a choice that the employer makes. Because if I have 5 schemes, and NSSF is one of them, and NSSF is giving a bigger return, and the law is saying you can choose to give your money to any of them. If I look at the balance sheet and see that NSSF is doing well, out of competition, not out of legal obligation, I may choose to put my money in NSSF. So it's nothing to do with stifling and killing NSSF. In fact, it's about improving NSSF, making it better, making it a center of choice, and giving people choice. And this is not foreign, it's not a foreign concept. I mean, it's happening in different countries. Even in Kenya, people have been putting their money with pension fund managers.
Well, listeners, this is Spectrum on Radio. Tonight, trade unionists question the pension sector liberalization plan. What is the response of government, considering the concerns being from our guest tonight, Mr. Moses Bekabye, chairman of the Retirement Benefits Sector Liberalization Working Task Force, and Mrs. Miriam Musali, a member of the task force, also working with the Capital Markets Authority. You will be able to call in and contribute to this discussion. Mr. Bekabye, how far are we going in this direction, liberalization and regulation?
In terms of regulation, as I mentioned, the minister recently appointed the board, and the board has started working informally, looking at the regulations, looking at the laws that they are going to implement, and the Minister of Finance allocated a budget and has subsequently allocated accommodation for the authority. So the authority is ready to start its functions.
The regulatory authority?
Yes, the regulatory authority.
Its instruments, does it?
Sorry?
Does it have all its instruments, the laws necessary?
Yes, it does. They have what they have to do immediately. I think the first meeting is to look at the draft regulations which are already in place, which they have to approve, because it's important that the authority, or the board of the authority, they have a final say on the regulations, because they are the ones who are going to be using them on a daily basis to implement this law. So they must feel comfortable with this law, with these regulations, and those regulations have been drafted and they have been given to the chairman of the authority, of the chairman of the board of the authority. In terms of liberalization, I just want to give a little background. The liberalization bill that we are talking about was submitted to Parliament in April, May last year, towards the end of the 8th Parliament. And this was a precondition for the 8th Parliament to consider the law on the authority, providing the regulatory framework. So it was a prior condition for Parliament to continue or to consider that bill. And we had to work day and night in order to remove that constraint so that Parliament can consider that bill. So the bill was submitted in April, May. And that bill, we knew at that point that it wasn't a good bill, and that's why we decided that when we knew that we would go back and introduce some amendments and revise that bill.
Yes.
And that's why the Ministry of Finance set up a task force, which includes not only Ministry of Finance officials, but it has about 45 members, mainly from the private sector, and people who are actually running pension schemes to provide input into this work. This work is almost being finalized. The deadline for the task force is September, is this month, and I'm hopeful that by the end of this month, the task force task will be accomplished.
How many trade union workers representatives do you have on this task force? 2 or 3?
Yeah, initially we had 3. We invited 3 trade union members.
3 out of 45?
3 initially to be on the task force. The 2 from NOTU, and they came and participated, and then 1 from COFTU actually declined and came and intimidated the 2 who were from NOTU, kind of like blackmailing them.
You have some names?
Yes. The 2 from NOTU was Stanley Kagwa, who is the, I think, Deputy Secretary, this Deputy Chairman General. They have different names. And the other one was Peter Ewerike. The one from COFTU was Robert. I don't know the other name. Can you remember?
Go on.
Was Robert.
Yes.
So subsequently, that membership of the workers was expanded to 8 members.
Yes.
From 3 to 8 members. And they have been part of our task force, and we meet every Wednesday, and they participate in those discussions.
But they have to say that you've stuffed this, you packed this thing with the task force with many people from the private sector who are basically going to be investing in this. They're waiting for the money to come, and they have their hands held out.
Our objective of inviting these people was to benefit from their expertise and knowledge they have, not only as fund managers, but also as owners of these people who are running pension schemes. So it's not only like fund managers or actuaries or whatever. Most of those people are actually people who have pension schemes. Some of them are voluntary pension schemes.
Talking about employers or what? Or people who are running the businesses already?
No, it's people who are
fund managers.
Who are not fund managers, employers and employees. Okay, who contribute to these schemes.
But they say you're not listening. Changing a comma, you have to pray all night, and the next morning you're not even lucky, you'll get a comma removed from that draft. You've set your mindset already.
No, that's not true. As I said, we have 45 members of the task force. One person cannot actually dictate over.
Well, they say together with the private sector people, you've arranged things in such a way. You know when these workers come, they're going to ask for this, and you say, we just say no.
No, that's not the case. We give them a chance to make a contribution. They twice made presentations. The fact of the matter is that their presentations are mainly, they just make presentations which are mainly making political statements. Oh. This is a technical working group. What we are looking for is a technical proposal, not making broad political statements. So they like broad political statements because that's how they appeal to their
maybe
masses.
You chose people who are not senior in the hierarchy. Maybe you chose, people who are at the bottom. You can bulldoze.
No, not really. Actually, most of these
did you write to the organizations asking them to nominate people?
Yes, we did.
At
and we have letters
level.
to that. And
at the senior level.
Yeah.
Yes.
Yeah.
And I actually carried some of those letters.
We'd like to look at them. We'd actually like to look at them. Madam Musali, if you can, let's have a look at them as you draw them. Madam Musali, which companies are basically positioning themselves or positioned to take over from this to become fund managers?
Right now, like I told you, we already have fund managers that are operating, and fund management is a business. As long as you meet the requirements to be licensed, you can conduct fund management.
What are the requirements?
Now, some of the requirements to be a fund manager is, first of all, you have to have adequate capital. Because you're going to be, the details of the capital are in the regulations that Moses spoke about. For example, capital markets, to be a fund manager, your shareholders' funds should be about 150 million. And it should be maintained at all times. It may be considered a small amount, but that is now the shareholders' funds, the capital that remains with the business. And then, of course, you have to have your working capital, and then you have to once they meet the 150 million, depending on the size, you definitely have to look at what the operations are and things like that. But then they shouldn't deplete the 150 million that they have already set aside, which is the shareholders' funds. So for the pension sector, the pension sector is also going to have very specific requirements on fund management. The people that manage the business have to have competence. The fund managers, they have to have experience in managing portfolios. They should have directors who are knowledgeable in this area. They have to have specialists who are knowledgeable in the area of investments. And so they apply to the regulator. Their application is looked at, it is assessed, and then it is approved by the board of the regulator. And then they are subject to compliance requirements, they are subject to inspection, and they are supposed to submit reports on a quarterly basis to the authority. The authority can decide to just go in and do an ad hoc inspection, for example, on a fund manager. So there are very strict guidelines on who can do this kind of business, and it's a very highly regulated business.
And minimum reserves, how much must they have? Do you have lines on this?
It's really the shareholders' funds that they are not supposed to deplete, which is
150 million.
Yes, 150 million.
So they can collect,
the CMA
they collect 50 billion, invest 49 plus. Once they have 150 million shillings, you have no problem with them.
What I wanted to mention first about the size of the shareholders' funds, like you mentioned, you said it's very low. That is a requirement that was put in place 10 years ago. The CMA is in the process of revising. So I expect that some of the requirements that are set by the regulator would be more in line with the current trend. So that necessarily may not be a trend for the new regulator that is coming in, but it could be a higher amount depending on what the market is like.
All right, this is Spectrum on Radio 1. We'll go for a break. We'll be back.
As we celebrate 50 special years, Nile Special invites you to toast to our great land. Nile Special, the rich, rewarding taste from the source. You've earned it.
When I sip from the Nile.
Not for sale to persons under 18.
Bank of Uganda and the Uganda Bureau of Statistics are conducting a survey on the real estate sector to collect data on price of land and property. The data collected will help policymakers better understand the economy and business people to plan for their investments. The monthly survey, which will be conducted in Kampala, Mukono, Wakiso, and Entebbe, will collect information on purchase and sale of land, residential houses, and rent of commercial premises for business and industrial purposes. The survey data will be published by Bank of Uganda and the Uganda Bureau of Statistics on a quarterly basis and will be available to the public at no cost. Interviewers with clear identification will visit real estate agents, property owners, and mortgage lenders to complete survey forms. Bank of Uganda assures the public that the information will be kept confidential, only published in aggregate forms, and will not be used for tax purposes. Bank of Uganda appeals to the public to cooperate fully with the interviewers.
Spectrum on Radio 1 FM 90.
Welcome back on Spectrum tonight. Trade unionists question the pension sector liberalization plan. What is the response of government considering the concerns being fronted? Our guests tonight, Mr. Moses Bekabye, chairman of the Retirement Benefits Sector Liberalization Working Task Force, and Mrs. Miriam Musali, a member of the task force also working with the Capital Markets Authority. You will be able to call in and contribute to this talk tonight. Mr. Bekabye, the trade unionists are still very strongly opposed. A new position they have. In the beginning, they backed this liberalization. They are in the task force. You raised their representation from 3 to 8. Have they raised some of these concerns to you in those meetings?
Sorry, how do we?
Have they raised these concerns in those meetings? Apart from what you say, they were raising political statements. Did they make these concerns, or are these the concerns that you call political statements?
No, there are some issues they have raised. But what I wanted to also say that the decisions in the task force are made by consensus. It's not like one person comes with a position and gets stuck to that position. Like I as the chairman, I cannot impose my position to the task force. It's by consensus. Okay, so everyone brings in a point, and then it's discussed by all these members, and then we chat way forward. Okay, so in that context, they are also able to bring in points of discussion here and there, disagreement, making proposals, and these are openly and transparently discussed, and the way forward is agreed upon by consensus. Mr. Moderator, there is one issue I wanted to quickly discuss.
Which one is that?
And this is the issue where there's widespread misinformation that government is going to take over the pension funds of private sector contributors, including voluntary schemes. This is not the case.
Well, that would be ridiculous. Already government has the deposits in NSF.
Yes, but the reform that we are spearheading is going to change the whole landscape for establishing and operating a pension scheme. We are trying to say that all pension schemes will be established under trust, and all that means that all the people who contribute to a particular scheme will have to sit and elect their boards of trustees. Trustee boards or boards of trustees?
Boards of trustees.
Boards of trustees. What does that mean? That means that the people who are contributing to those schemes will be in effective control of their funds and not government. And this is aimed at minimizing to the extent possible the influence of government in these schemes, in the running and establishment of these schemes. So all these schemes, including the public service pension scheme, the NSSF, the voluntary schemes, and all other schemes that are operating, will have to be re-established under a trust foundation. Some of them already have trust deeds, and they are already preparing for these reforms. And the point here is, contrary to what people are saying, we are saying that the people must be in full control of their funds, including hiring and firing of fund managers. Fund managers are not going to come and take away people's money without the decision of the boards.
Is it the workers or the employers?
They are going to be employees.
The workers will determine?
No, it's going to be the employees, the people who contribute to these schemes.
Yeah, maybe
so
if I could
people who work for the same
clarify.
company can save their money in different places? Is that
What I'd like to clarify is what's happening with liberalization is you have a choice of where your money should go. So if I put my money as an employee in the fund, and there's an option that there's NSSF, there is, this other pension scheme and this other pension scheme, the Board of Trustees will call a meeting of the members of their scheme, who are the workers anyway. And they will tell them, these are the options we have. One, we have to use someone who is licensed. All the 5, including NSSF, is licensed. These are their financial statements. This is their proposal. This is what we can offer. So where should we go? Now, based on that analysis, and of course the competence, that's why the issue of competence is very strong. The competence of the Board of Trustees is critical to help their members make the right investment decision of which choice of fund manager they should take. So it's a very good thing, because instead of you putting your money in NSSF by law, they are saying you can choose A, you can choose B, you can choose C. And so the power of choice is actually with the employees, the people that are going to save through their scheme and through their Board of Trustees.
Give us a timeline to this process.
A timeline to...
this liberalization. How are you going to move it? We've heard about gradual liberalization, partial liberalization, and you can talk to us about safeguarding NSSFs, the money in NSSF, about $1 billion there.
Okay. In terms of the way forward, What we envisage in the Ministry of Finance, Planning and Economic Development is really the task force to complete its task by end of this month. And going forward, the process will be managed by the Honorable Minister in conjunction with Parliament, because the bill is in Parliament. It is a product of Parliament as it is today. What we are going to do is to try and introduce amendments to it. So once it goes to Parliament, we cannot actually determine the dates for Parliament to consider this bill. But we envisage that probably by the end of this year or sometime next year, this should be accomplished. You asked me about what is meant by gradual and partial liberalization. Gradual liberalization means that these reforms that we are undertaking, we've made provisions, proposed provisions in the bill that will allow these reforms to kick in gradually. So that, for instance, what we are proposing is that those people who are now contributing, or they have arrangements, existing arrangements, they'll continue with those arrangements in terms of accessing their benefits. But when the law comes in place, becomes effective, those people who get employed in formal employment, you know, when the law has been passed, they'll come on a new scheme, on a new arrangement. You know, that's what we are proposing. That allows these reforms to kick in gradually. Okay, partial means that there is a portion that we are currently allocating for the NSSF. A third of the 15%, you know, that we contribute to NSSF, we are proposing that that a third,
5%,
yeah, which is 5%, a third, will continue being mandatorily contributed to the NSSF in order to safeguard the NSSF and allow it time to reform internally so that it can be ready for competition. So you're talking of safeguarding NSSF. Also, within, after this law has become effective, we are also proposing that all those funds under NSSF
at the moment, at the $1 billion,
at the time when, by
the time you liberalize,
at the time, yes, this becomes law, those funds will be preserved there for 5 years. Okay, but the workers are saying that we should allow everyone just to opt out like that, just get a letter from the Ministry of Finance. First of all, it wouldn't be prudent for the Ministry of Finance to be the one to determine who gets a letter, you know, to open up a pension scheme. We just want to eliminate that, you know, and modernize the whole sector.
How do you handle it?
Handling what?
Well, the modelizing, so it's not the minister, is it this committee that you're talking about?
Yeah, that's why we are putting in place these laws. One is the regulatory law, and one is the liberalization law. So it's going to be by law and not by discretion. Establishment of these schemes are not going to be determined by the minister, nor by any official, but by an act of parliament. And the requirements will be put in place by the regulator. Whoever meets those requirements, okay, will be free to set up these schemes. I just want to make...
You have some people who have already approached you who want to do that business.
Not yet, because the laws are not yet...
You sure?
The laws are not yet in place. The liberalization law is a bill, is a proposal.
To help the country grow by investing in that sector, you don't have any letters on your desk?
No.
Not even in the committee, the working group?
No.
Not even one?
No, sir. What I just wanted to clarify here is that there is a differentiation of treatment between those schemes that will be getting mandatory contributions versus those that are voluntary, both in terms of regulation and in terms of treatment in the liberalization. This is because voluntary schemes are voluntary in nature. We don't want to over-encumber them. We don't want to increase their costs, operating costs. But mandatory schemes, because of the contingent liability on the government, you know, the regulatory framework is going to be onerous, so that in order to protect these funds are to minimize risk. So the
regulatory framework is going to be onerous. It's going to be heavy on them. You're going to be really tight on them. You regulate them very closely. You watch them closely.
Yes, to make sure that...
Like you tell them, you don't invest beyond East Africa.
That's
not sending money to Europe.
That's what the law says at the moment, as Miriam said.
It could be amended to remove that clause, so you can send it to Luxembourg, whatever.
We cannot predict.
You can place limits.
Yeah.
I think different jurisdictions handle it differently, and one of the ways they handle it is to put a certain limit, a certain percentage that should be invested locally, and a certain percentage that should be invested offshore. Because, as you know, the markets, they move up and down, and there'll be times when investing in East Africa may not be a very safe option if the East African markets are suffering from, certain problems.
Then you can allow capital flight.
Yes, exactly.
You can allow capital flight.
So that provision should be looked at, because obviously it's a big restriction to put a blanket restriction and say you must invest in a particular region. Pension funds, of course, enjoy benefits from investing in different products that are in different markets. And of course, the issue of diversification. You want people to diversify their portfolios as well.
Is there a lobby to ensure the East Africa clause is removed?
I think that concerns have been raised.
So might see capital flight, like the traders are saying.
Not that you will see capital flight. The concerns that have been raised have been that the law is it's a blanket provision that says you must not invest outside East Africa.
But it's basically a safeguard. It's not necessary.
It may be a safeguard, but it could kill the scheme. Because if you look at the portfolios of some of the
obsession about liberalization, privatization has been seen to have had some bad effects.
Yeah, but not absolutely bad, because as you know, if someone is a monopolies, they set the trend. They decide what happens. They look at, they decide the investments. They decide on how much interest rate they will give and things like that. But when you have competition, you want the best service. And so liberalization is saying, I want the best service for the people who are saving for retirement.
All right. Okay, we're going to hear from the listeners, but before we do that, can you give us some case studies from other countries where it has worked? Specifically, elsewhere, but also in Africa.
Also in Africa.
Countries, yes.
I think that if you look at Ghana is a good example. Ghana has
how old is that scheme of theirs?
Not necessarily the scheme, but Ghana has gone through both reform and establishment of a regulator, and the law that placed in reform also had liberalization of the sector.
Did it work for them?
I think it's a success story.
How many
Ghana
years
is
now?
A success story. I think their reform has been maybe 5 years, not very long. But 5
years they would have seen some.
Yes, and then of course Kenya. Kenya is another example, because
are they not rolling it back? Somebody said yesterday they are rolling it back.
If you look at what's happening in Kenya and the distinction with Uganda, it's a very big distinction, because in Kenya the schemes have been giving 400 Kenya shillings to NSSF.
No,
400, the contributors, 400 Kenya shillings,
small amount.
200 from employer, 200 from employee. Where have they been saving the rest of the money? Of course, they've been putting it with the pension funds.
Let's hear from the listeners. This is Spectrum on Radio 1 tonight. Trade unionists question the liberalization of the pension sector. What is the response of government considering these concerns that are being raised? Our number 0414-348-111, 031-226-0390, 031-226-1390. Spectrum, hello?
Hello?
Yes, sir, your name?
Yes, I'm Mr. Werike, the President of London.
Yes, Mr. Werike.
Well, I want to thank our brother, Mr. Bekabye, for his contribution.
Thank you. Spectrum, hello?
Good evening.
Good evening, sir. Your name?
My name is Joel. Actually, I'm the chairman general of NATO. The first thing that I want to thank
the two sides of you in the studios, but we hope you'll come in good faith so you can have it argued out across the table. Spectrum, hello.
Hello, Henry here speaking.
Yes, Henry. Spectrum, hello.
Good evening, how are you?
Very well, thank you. Your name?
I'm called Sam.
Yes, Sam.
Yeah.
Spectrum, hello.
Good evening, how are you?
Very well, thanks. Your name?
My name is Musime Crimson. I'm calling.
Well, some people think of bringing back Uganda Airlines, but let's hear from the horse's mouth, like they say. Madam Musali.
Yes.
Can give us your responses?
Yes, sure. I'd like to respond to Mr. Peter Werike, who spoke about the fact that right now we are focusing on NSSF and saying people should think of getting out of NSSF. I think that first that was wrongly quoted, and the focus here was to look at the fact that NSSF will be an option not the only option. And that is the message we want to give our listeners, that liberalization is saying you have many options. Don't stick with one option. Don't go to one doctor, and if that doctor is not available, you die. Liberalization is saying go to as many doctors as you can, get the best treatment possible. And so that is the goal. In regard to social security, as you know, government has come up with an agenda for social security reforms through the Ministry of Gender. There's actually a pilot project that is ongoing. It's called SAGE, where they are giving a certain small amount. Exactly. So this reform is not so much about social security.
150 million is the salary of one member of staff in some companies. At the end of the month, he might say, let me set up a pension fund from my salary 1 month.
The figures that I gave,
50 billion,
no,
yes.
the figures I gave were figures that had to do with the current legislation on pension funds.
How much is the ideal?
Right now, we would have to look at things like what the Kenyans are looking at now in regard to their portfolios. It could be raised to 500 million for all I know.
Still, it's a tiny amount. If NSF takes 50 billion a month, it's still a small amount.
Right now, that question has to be dealt with the board of the Retirement Benefits Authority. Exactly. I cannot set an amount now in the studio arbitrarily. They have to look at what is happening. They have to look at the principal fund managers. They have to look at what's happening in other countries in terms of the portfolios. And so that figure will be decided by law. And this studio is not even trying to give an indicative figure of that.
Okay.
Mr. Bekabye.
Yes, I just want to respond very quickly to add on to what Miriam has said, that the reform we are undertaking is not targeting NSSF, it's for the entire sector, pension sector. Secondly, Mr. Owere is talking about representing workers. Of course, all of us are workers. What Owere and the group are representing are unionized workers, who contribute only 7% to the NSSF. If it was a company, the NSSF would be having only 7% shareholding. I mean, the unionized workers, under Not One Kof, would be having only 7% shareholding in that company. Yet they are the majority on the board of the NSSF, and that's not good corporate governance. So how about the 93%?
You're hitting them below the belt. They'll come back here, then you can score out of
There are those ones who contribute 93%. Where are they? Okay, let me leave that to you. Secondly, the scare.
Gloves are off. Go on.
Secondly, the scare is that the government is planning to take over these schemes. This is not correct. In fact, we are saying that because of the nature of voluntary schemes, all the beneficiaries, the savers, will determine in which way they want to take their money. If they want to take it 100% lump sum, they'll be free to do so. If they want annuities, they'll be free to do so. If they want a combination of annuities, lump sum, income drawdown, they'll be free even after when this becomes law. So the treatment of voluntary schemes is going to be different from the treatment of those schemes receiving mandatory contributions. And therefore, it's not true that government is planning to take over the savings of these schemes.
Let's talk about what, finally, just before I leave this room, pardon me, NIC with the Makerere University money. Government had come in with 27 billion shillings, a tidy amount.
Yes, very quickly, the problem with the NIC was because of lack of regulation. As we said, before the regulator came in place, before this law became effective, there was no regulation. Most of these schemes, NSSF and the rest, were self-regulating, and that's not right. So that's why things went wrong. Secondly, because of the representation on the Uganda Insurance Commission of some members of Association of the insurance industry, they actually prevented effective regulation even within the Uganda Insurance Commission. So in other words, the Uganda Insurance Commission was not able to zero in onto these associations like NIC and so on, which were misbehaving because of the representation on the board of these associations. And that's what the workers wanted to be on the on the board of the regulator, which the Ministry of Finance actually resisted, because they will be self-regulating, because they own the NSSF, and then there will be the regulator, they will be self-regulating. That's why we resisted it. That's why they are fighting us.
We have to go, but finally, the timeline, very briefly, when do we expect this whole process to end, so you can go home and do other things?
If all goes well, we expect the bill to be enacted by Parliament before the end of this year.
Before the end of this year. Madam Musali, suppose we decided to drop all this and continue the way we are, what would happen to our economy?
Knowledge is power. Different countries have gone through reforms of their pension systems through regulation and through giving people power to choose where to save their money. It's in the best interest of everybody, and people should get the facts right. People should approach the Ministry of Finance if they are afraid of the reforms to get the right information. The Retirement Benefits Authority Act is already being sold in the Uganda bookshop. You can read it to see for yourself that what is being proposed for government is good for you as a worker. It's good for people who are retiring. It's good for the sector, and we expect that there will be growth. There is evidence that there's growth in national savings as a result of reform.
Well, we have to go. I must thank you very much indeed, dear guests. Mr. Moses Bekabye, Chairman of the Retirement Benefits Sector Liberalization Working Task Force. Thank you for coming to Spectrum tonight.
Thank you.
Mrs. Miriam Musali, a member of the task force also working with the Capital Markets Authority. Thank you for tuning in. I've been your host, Edmond. Kizito. Spectrum will be back tomorrow. Up next is the news in English.
Hello, Uganda. This is Regina.